Welcome everyone to Real Hot Talk. Today I got Joey Roque with me, and he is representing Skyline Home Loans. And do you have any expectation out of these wings today?
Nah, man, I just want to go home dry. I know I should be sweating by the end of it, so.
Big kick. Okay, so we're going to start with the first wing. Go ahead and dive in on this one. It's not too bad, pretty easy going.
Not too bad.
First question, what is a FICO score?
All right, so FICO score. I actually get this a lot because typically I say FICO score and they're like, what's that? I'm like, well, it's your credit score. Oh yeah, a credit score. So there's one and the same, obviously. Just a different word. Imagine going to a Vegas casino. It's the odds you would win.
Okay.
However, let's put it in the other side of the casino side. As a creditor, it's the odds you'll pay back your loan, your credit card, your auto loan, your home mortgage.
Gotcha.
So in essence, the higher your score has better odds. The creditor wins,
Gotcha.
in essence.
Okay.
So the higher the credit score, the better the odds you're going to pay back your money.
That's actually a really good explanation.
So.
And that FICO score is what they look at when you're trying to purchase a home.
Correct.
Okay.
So what we use a tri-merge credit pool, which is Experian, Equifax, and TransUnion. We use the middle score, and if it's two borrowers, we use the lowest middle score. So in essence, husband has 760, wife has 764. We use 760.
Gotcha. Okay, definitely makes
Makes
sense. So I did forget to mention this. I should have the names of these, but this is pretty much a mystery batch. We ended up buying a whole bunch of hot sauces, and I have no idea what we're diving in, but it is supposed to get progressively hotter. This one actually has chili peppers on it, so this one actually looks pretty scary. We're gonna dive into this and then get to the second question.
All right. It's got good flavor.
It's a good flavor. No immediate kick yet.
It's coming.
Hopefully not. So next question. What if I don't have a great credit score? And basically when we wrap that up, what would you say a good credit score is?
So to be honest with you, a great credit score depends on what type of loan you're going for, right? In the FHA world, you can go as low as 580. You know, so I'm not going to say you can have some lates or derogs, but if you had some in the past and you have yet to get to the 640, 660, 680 range, even 700 range, we can still get you financing.
Yeah.
You know, so a great credit score, in my opinion. Most first-time home buyer programs start at 640. Fannie and Freddie have programs for first-time home buyers with lower mortgage insurance at 680 plus FICO scores. So really, your range is, I would say, minimum 640 to get some first-time home buyer stuff. Decent score, credit interest rates with cost.
Okay.
And then if you get above 680, it's considered, in my opinion, the next tier. Over 740 is considered prime in our world.
Okay, so you don't necessarily need like fantastic credit scores to.
Fantastic, no. I mean the 800 is a myth. You know, I mean,
Right.
if you're over 580, we can get you financing.
Okay.
Plain and simple.
Really good to know because I do have a lot of buyers that you know, they struggle with their credit and they don't even try.
Hey, we're young.
Yeah.
You leave school with $40,000 of student loans. You can get maybe a credit card with a $500 limit, and most of your credit score derives off of available limit compared to your available borrowing power, right?
Yeah.
So, you know, they do open up the financing, and yes, that is getting hotter.
Yeah, right. It's definitely kicking in now. I don't know about you, but I'm starting to
I feel it.
So the next wing, this one actually is named 321 Blast Off, but I don't know what kind of sauce it is. So we're gonna go ahead.
Cheers.
Yeah, right.
Normally I sit there and I lick the sauce off my fingers, but I'm kind of trying to not do that right now.
Probably a smart move because this has an immediate kick.
Yeah.
I almost need a second to ask this question. So, again, we're kind of going for first-time home buyers. You know, a lot of them typically think they need $100,000 to purchase a house. Do I need $100,000 to purchase my first house, my next house? What is?
Not at all.
Okay.
Plain and simple. Not at all. Like I said, the 640 mark, that's key. Most of the first-time home buyer programs are 640 plus. Those wings are really hot.
Yeah.
So, most of them 640 plus.
Okay. We're talking credit score 640.
640, yeah. So
Yeah.
down payment we can get you in for about $1,000 or less.
Wow. Okay.
Yeah.
That's
So I mean that comes to the fact that we have a first, a second, and a third through Calhafa. We have other programs that allow it as well.
gotcha.
And I can barely talk right now.
This next one, you're ready to move on, correct?
Yeah, sure.
Let's just keep this going. So next one should be the Ghost Pepper Wing. It's called Are You Afraid of Ghosts Challenge. So I've had some experience with this one, and it's gonna be interesting after this one.
All right.
Ooh. How does my credit score affect my interest rate?
All right. Well, I got a 35-second window to breathe.
Go ahead.
So the credit score. Fannie and Freddie, they give you what's called a loan level price adjustment. In essence, the lower the credit score and the higher the loan to values, the bigger the hit, in essence. Here comes that.
it comes in waves. Oh, man.
Okay, so in essence, 680 FICO score, 90% loan to values. 720 FICO score, 90% loan to value. The 720 is going to have like say a quarter better rate.
Okay.
Okay. I'm not quoting rates right now, CFPB wise.
Gotcha.
But in essence, that's kind of the hit, you could say. So we're all given the standard. It's across the industry.
Right.
Fannie Freddie wide, but it's FICO score, loan to value. It's kind of that square, and you move it from there.
So when you say Fannie Freddie, I feel like I've heard of Fannie Mae for they give out loans for people going to college. Is that correct?
Fannie and Freddie are government-backed mortgage financing.
Gotcha.
Okay, it's conventional side. Ginnie Mae finances FHA, and you have the VA side as well. So on the FHA and VA side, their boxes are bigger.
Okay.
You're talking 640 to 680 instead of 640 to 660, every 20 points.
So
On the conventional side.
unless I had prior experience in the military, I'm not going to be going for a VA loan. That's veterans only.
And it's not just prior experience in the military. You have to have a certain amount of time in the military in order to get full benefits.
Okay. If I'm a first-time home buyer, no military experience, FHA is probably something I'm going for.
We can go FHA or conventional. They have the same first-time home buyer programs through CalHAFA.
Mm-hmm.
The difference is if you have higher FICO scores, kind of want to lean towards the conventional side. At lower, we'll lean towards the FHA side.
Gotcha.
Yeah.
You ready for this next week?
Yeah.
As ready as you'll ever be, right?
Kind of. 1 second. All right. Is this still mystery?
This is going to be mystery, yeah.
All right, let's do it.
Good luck. My pores are already shivering. Nope. We're going to take one bite, call that one good.
I tried to go on the lower, on the lower side. Woo! They're as hot as the Angels. I mean, they have the highest run differential in baseball. Scored the most runs so far.
Yeah.
Otani, he's hitting jimmers.
There you go.
What's the next question?
Let's get it going with, tell us how you rescued a loan.
So the one thing that separates Skyline, in my opinion, from the rest of the lending world is interest rates. The way I look at us is we have the rates of a Quicken loan. However, we have the service of your everyday mortgage broker in the Inland Empire.
Right.
You know what I mean? So we're a direct lender to Fannie, Freddie, Jenny. We're good there. So we have the guidelines, we have the processing, we have the underwriting all in-house. However, we have the pricing of the internet companies, the cash calls, the Quicken loans. So when you get a client, you say, hey, you know, Frank, I got you my guy. He's got the best rates. If he prices me out, I kind of encourage it. He knows he has the best rate after 3 other quotes. Plain and simple.
Okay.
You know, so how I saved a loan the other day was the borrower rates have peaked in the past couple months, right? I'm gonna take a drink because this is ridiculous.
Just so everyone knows, we are shooting today, April 2018. I almost said 17. These wings are literally messing with my logic. But just so you know, as far as we're talking rates, April 2018.
April 2018.
Yeah.
So, I mean, from December to about, I'd say, mid-March, June, once again.
Yeah, we were both feeling it.
Yeah, mid-March, they spiked about 0.5%. Some people got pre-approved. I mean, you know how competitive the market is right now. You submit offers, you don't get a house maybe for 6 months.
Absolutely.
Long story short, the payment goes up $85, $90, $100. Well, when you're shopping at your max, you don't qualify anymore. So I was able to get them 3/8 lower in interest rate, you know, and they qualified.
Gotcha.
Whereas the other lender could not get them qualified.
Right.
So, you know, that's the last loan I did save.
Awesome. That was great to hear.
Yeah.
Good. Always good to hear the good stories. Past couple interviews, we had some tragedies, but pulled through, and it's always good to hear those good stories, man.
Yeah.
This last swing, are you ready for it?
Yes.
Cheers.
What's even worse is I have chapped lips right now.
Yeah.
It is burning.
Yeah. No.
I'm not going to cuss on national television. However, whew. Yeah. All right. Next question.
So the last question we got for you is, can you tell us how are all mortgage companies the same? Is there any differences? Can I walk in off the street and just kind of expect, you know, I'm going to get a loan? Like, are they all the same?
In today's world, with all the regulation, you'd assume so, right? I mean, we got the heads above us, you know, the CFPB, the Fannie Freddie guidelines, Jenny's, all the guidelines, you know.
Absolutely, yeah.
However, it comes down to the in-house staff, plain and simple, and who you have owning the company or who your superiors are, right? So Skyline was created because, and we just have actually merged with Finance of America. The owner of Skyline is now a president of Finance of America.
Wow, okay.
So we didn't lose our name, we lost nothing.
Gotcha.
Difference is we gained a bigger portfolio, better pricing, because we have a larger stack to sell.
Absolutely.
We gained a lot, long story short. Who originally created Skyline was a lot of real estate heads. When I say real estate heads, we're talking builders, real estate flip companies, home warranty companies, you name it. So it wasn't the big bank VPs, right?
Yeah.
We were having the back of the realtor, the seller, the buyer, and not the bottom line, you know, at the end of the day. So they came together and they each offered value props, you could say, to our preferred, you know, partners.
Right.
One of which is we pay for a home warranty for every buyer that submits an offer. You know, so we pay for it, $420. I know it's pennies in the long run. However, when the seller doesn't have to pay for it,
yeah,
and the realtor doesn't have to take it out of the commission check, I mean, that's $420 every transaction.
That's a benefit for every buyer. Yeah, absolutely.
The next one is we offer a 12-month lock. So say you get someone who wants to sell their house and purchase a new construction loan.
Okay.
Sometimes, you know, you get city inspectors 3 months out, 6 months out. Say they're not going to be done for 9 months. all we do is lock in the loan. It's an insurance policy. It's not going to be today's market rate. But how we counteract that is we also have a free float down. Say we lock you in at 5% for 12 months. Rates at the end of 12 months are at 5.5. Well, you get 5. Say rates are at 4.5. Well, we have a free float down, so it doesn't matter. You get 4.5.
Okay.
It's a win-win no matter what. In regards to other props that other people have offered, we have up to $9,000 in closing cost help.
Wow.
So 2 points of the loan amount we have available to help benefit whether you want to buy down the rate or use it towards closing costs.
Right.
That can be used in a multiple offer situation. Say there's like 10 offers and you're like, hey, seller, we'll pay your title policy with a portion of the money.
Right.
Well, that puts you 2 steps above.
Right.
Plus you're paying for the home warranty.
Gotcha.
So now it's a win-win.
Yeah, you're totally above the next offer,
Right.
which I could totally see how that could strengthen your
100%.
Yeah.
And don't make me throw the last one in. When $1,000 credit to the seller from the buyer if you don't close on time.
Interesting. Okay.
So you write in the contract,
Mhm.
buyer to credit seller $1,000 if we don't close on time.
Total incentive. Total incentive, right?
100%.
Yeah.
The difference is if we don't close on time, we raise the buyer's credit by $1,000 and they credit the seller $1,000. So far, we've had to pay that one time in the past 12 months, and the reason why we paid it, not on the behalf of us or because of our mistake, is because they ordered the termite too late.
Oh,
It
okay.
was a 21-day escrow. We closed it in 24 days. But when we get docs out in 16 days, and you order the termite on day 20, what can we do?
Yeah, absolutely. Yeah. This is
So,
a scheduling error.
Originally, it shouldn't have been our cost, but we incurred it because we're here to make people get into homes, realtors be happy, and everyone to close as soon as possible. So that's kind of the way we roll.
So, long story short, I can't walk into Quicken Loans and expect anything that you're providing as far as...
Quicken Loans will give you maybe the same rate, but not the same service.
Right on, Joey. Thank you for joining us out on this interview. Hope to have you back. More interesting questions. Hopefully not hotter sauce, but you never know, right?
I'm gonna go cry. Right now.
And go change into your separate clothes.
Yeah.
Thank you guys. You guys have any other questions, let us know in the comment section below. You like what we're doing, you have any suggestions, again, let us know in the comment section below. Message us, smoke signals, pigeons, whatever. Just get a hold of us.
Throw something at us.
Yeah,
Jacob,
right.
I appreciate it. Seriously, thanks for having me, man.
Yeah, take care, man.
Appreciate it.
Whew, God damn, that was wound.